As we begin 2021, it feels like the milk market is trying to decide if the government is going to step in and start buying product, and if so, when. After 2 shortened weeks of trading, this is Dr. Lawrence Jones with your milk prices and milk markets for the week ending January 1, 2021. We'll be starting this week with a red screen because overall milk prices came down about 23 cents this last week. However, most of the damage was done in the January and February contracts. And after that, the market kind of just was waiting to see what's going to happen. So let's start looking at the data. As usual on Wednesday, we had the National Dairy Sales Report released, and this was the 4th and final one for December. It came in at 1522 equivalents, which is about 35 cents lower than we had anticipated. And again, the majority of that difference was due to whey came in around 42 cents when we had it closer to 46. And so the National Dairy Sales Report's not been keeping up with the spot market on whey, so that caused us to be off a little bit. Overall, blocks came in just about a penny less than we had expected, and barrels were just about a penny and a half, so not vastly different, which brought cheese in at $1.5874, where we predicted $1.59, so again, very close. Butter was a little bit down at $1.48, and non-fat dry milk was at $1.10. Now, since this was the final National Dairy Sales Report, the final for Class 3 for December was $15.72, and you remember that's a few cents less than we'd anticipated, but within that margin of error. We had a Class 4 of $13.36, on-farm butterfat at $1.54, on-farm protein right around $3.03, and other solids just about 22.5 cents. For those with cheese contracts, cheese came in at $1.64. If we put this 1522 Class 3 equivalents in context of the 2-week earlier spot market, which was a 1505, that means that the National Dairy Sales Report had a 17-cent premium, when normally we expect that about a 50-cent premium. So these are the 4 that have December involved with them. The spot market went from a 1508 down a little bit, then back to a 1505, whereas the National Dairy Sales Report came down from the previous month to 1684, and then just kind of settled out this last 2 weeks in that 1520 range. So now we've got to try to predict what next week's will look like. And again, I always go back to what the spot market was 2 weeks earlier, and that would have been December 14th to the 18th. So if we look at the trades that week, blocks were in that $1.64, $1.65 range, and barrels were in that $1.45 range. So I'm going to go ahead and set blocks at around $1.65 and barrels at this $1.45, but give them a 5-cent premium, because typically the National Dairy Sales Report is above the barrels, so around $1.50. The actual numbers have Class 3 for next week coming in at 1545, so a little stronger than this last week. And again, blocks at $1.64. I'd said $1.65, but $1.64, $1.65 range. And barrels at that $1.45 plus a 5-cent premium. I am going to go ahead and stick whey up, because at some point has to acknowledge that the spot market's very strong on whey. And non-fat dry milk seems to have come up, so we'll put that at $1.15. And butter right around that $1.46, which is just a little lighter than it was this last week. If we go out on a limb for the entire month, right now my numbers are showing about a 1586 Class 3, a $1.60 butterfat, just a little under $3 in protein, and a 27.5 cent other solids. I think this is going to come up a little bit from this estimate, So we may break $3 on the protein number. And class 4 is going to be right around $14. If we look at this $1.45 for next week, that's only a 24-cent premium over the spot market that was a $15.21 2 weeks ago. So I wouldn't be surprised to see this come up just a little bit and start approaching this 50-cent premium, but right now we're going to leave it at that $1.45 number. As we look at the spot market, remember again that we had the 4 days prior to Christmas and then the 4 days prior to New Year's. So these are very short trading weeks. So whey is trading in that $1.45 last week and settled at about $1.46, so hanging it right in there in that range of $1.45 to $1.46. Cheese is the interesting one. The top is the blocks. We started out at about $1.58. We rallied last Tuesday, and then we came down a little bit, and then it just slowly climbed this last week. Barrels did the same thing. We rallied last Tuesday and then came off of that rally. And then this week they've just slowly inched up and inched up and inched up. And so this is a bit of a quandary because this is asking the question of, is cheese slowly rising, or are people hoarding cheese right now in anticipation of the government actually doing something? Because the demand side would not suggest that cheese would be going up, but it actually is. So it's going to be interesting when we come back to full strength this next week as to whether these cheese prices continue to inch up just in that $1.55, $1.65 range or fall back off a little bit. My guess is it's going to inch up and hang in there at that $1.55, $1.65 numbers for barrels and blocks. Butter came down a little bit. It was up at that $1.52, and then this week it settled down quite a bit on Thursday to about $1.42. So it's going to be interesting to see how this number comes together, but this has been fairly negative for butter. Non-fat dry milk is holding in that range between $1.13 and $1.15. Came off of that last week. We had some lows on Tuesday, and then it came back up on Wednesday, and then back up a little bit more on Thursday to this $1.14.2 kind of numbers. This is an interesting graph that has the spot market this last week and the January contracts, and this is where I think this could easily have been the fact that a lot of people were off this last week and not paying attention to this, or the spot market will come down to meet the futures market. But right now, this is trading with a very narrow premium, and we're still 5 weeks out from January closing, and there's only a 13-cent premium here. We would expect that to be closer to 50 cents. If we look at the barrels and blocks, there's only about an 11-cent spread on those, and again, that is long-term, historically typical. But we've seen a lot of wider spread than that recently. And if we look at the highs for the week, we were right around that $17 number for January, and the lows were where we closed at Friday at $15.80. So I'm expecting to come off of this $15.80 a little bit as we open up Monday, and the question is, will we pop up to $16.25, or where will January kind of head this next week? It'll be interesting to watch that relative to the spot market, because I don't expect it to trade at a discount being this close to closing. If we look at the next 12 months of futures, turns out that butter did come down about 4 cents, which brought the on-farm fat price down about 4 cents. And so we're going to be struggling to be at that $2 number now until about November of next year if these hold. And we're pretty well close to the lows that we've set for butter. We've come off of these highs by quite a bit. Cheese came down only a penny, but you can see it came down pretty significantly in January and February. This is trying to decide when the next government purchases are going to happen, and now they're thinking that it's not going to be closer till March, and so these gave up a little bit of ground here. Now, protein prices actually came up about a penny, and we always have to remember that we know the price of cheese and we know the price of fat, the difference is the price of protein. And since cheese came down, but fat came down more, that means that protein actually went up. So protein is always inversely related to fat. If fat goes down, protein will go up. And so we should be seeing some nice protein numbers right now in February and then kind of trailing off. And we should be above that $3 number all the way through November. So we'll see if these hold, and that's partly because of fat coming down. If fat starts to gain some momentum, then these protein numbers will come down a little bit. Whey was largely unchanged right at that 44-45 cent number, which translates into other solids right around that 24 cent number. So we're going to see on-farm other solids numbers should be right around that 24-25 cent range all the way through this next year if these whey prices hold. So butter came down 3.6 cents and cheese came down a penny. And again, that's why protein came up, because if butter comes down this much, the difference is protein, so protein had to come up to hold cheese up. And whey was largely unchanged, but all of these being negative are going to pull down the Class 3 price. And Class 3 lost about 12 cents. And again, majority of that was in January and February. So we're off a little bit in midsummer next year, but largely this is just noise. So the January and February contracts are the ones that really lost this 12 cents. And if we look where the contracts were down 50 cents, it clearly shows that only January was down 50 cents. February was down, 22, 23 cents. Then after that, it was, plus or minus 5 cents. Non-fat dry milk came down just about a penny. It seemed to get a little worse as we went out in time. So if we put the 3.6 cents that butter came down with 1.4 cents of non-fat dry milk, that means that Class 4 had to have come down a little bit. And in fact, it came down 27 cents. And the way that those numbers all come together, it's pretty well uniform throughout. So let's tie all this together with a 27 cent decrease in Class 4, a 12 cent decrease in Class 3. When we use the percentages of utilization across the country right now, that's a 22.5 cent decrease in milk across the country. And what we see is that whey did not impact it at all. Cheese brought it down just about 3 cents. It was all the butter, which brought it down 11 cents, and non-fat dry milk, which brought it down 8 cents. So it was all butter and non-fat dry milk that dropped the overall milk price. And we put that into the map. What we're seeing is about 22 cents on the eastern seaboard. The southern belt lost the 24.25. Pacific Northwest lost about 21. And then the Minnesota, Wisconsin, because the Class 3 was down the least, would have had the smallest decrease in milk price. If we look at January, it is a 5-week month for National Dairy Sales Reports, and we have to remember the week of the 18th is a holiday, so the third National Dairy Sales Report won't come out till Thursday. We're actually going to have 3 international auctions, and we should have the December uniform prices around the 14th. We get the cold storage report a couple days late because of the holiday, so that's going to come out on the 25th, along with the milk production report. Both of those will be out on the same day. And then we get the final class and components for January on February 3rd, so this is a 5-week month. I'll finish up this program to say that I am excited about 2021 being here. I'm very hopeful to get a vaccination soon so that I can go out and start visiting farms again. I hear there are some fish waiting for me in Florida, so I definitely want to pursue that. So I want to thank you for watching this program, and until next time, this is Dr. Lawrence Jones with Farm Institute, and please be safe.